of January. We are just after the market close, and during the trade session today, took a very critical decision. What we are obviously seeing, what I have in front here is the Nifty 50 chart, and it's on the daily time frame. And in this chart, we can see after this fall, the rally upwards has obviously created new life highs. Uh, the market is not only moving higher, it is also doing this with higher volume. That is a continuously a volume chart which is forming higher tops and higher bottoms. And the upside is in general supported by volumes, which largely indicates that any significant correction in the market in general needs to be bought into. Uh, Zooming in a little bit closer, we are seeing that after the fall, the pretty sharp fall on the 12th, on the 21st, on a Monday, the market immediately recovered and has subsequently created new highs. In the process of recovering, the market had created a few gaps here and consolidated to continue this upward move despite forming two bearish Marubozu candles. The interesting thing about the up move today, however, is that Monday the market has opened and clearly formed a gap. Now, after a move that has stretched from say roughly 13,150 levels right up to 14,500 levels, a roughly 1,400 point move or a 10% move in the market in pretty much less than a month, it's reasonable to assume that this is what I would think is called as an exhaustion gap. Why would I say I would think? Because like most things, like most technical parameters, it too requires a confirmation. And the confirmation of this exhaustion gap should be a fake high tomorrow or a clear cut gap down. In the event there is a gap down in the market, a gap down open in the market, then only in that event the pattern continues to form what is a relevant evening star. So this is an exhaustion gap. It's not necessarily a star yet, but definitely the gap up today in the morning. Um, the gap up today in the morning. Intuitively, I felt the need to square off most of the long positions that I had built up, and so I'll just basis this exhaustion gap. So I'll just share once how it looks. So this is the PNL portfolio. So these are of course the future positions. We are seeing ONGC, HDFC. Nifty long is continuing along with the. I've just taken up positions on USD INR, and in cash we bought Sanofi today. But rest you can see Atul, MCX, Galaxy, Surfactant, Medani, Vinati, Organic, Weber, Global, CDSL, Reliance, KPIT, Cummins, Whirlpool. All of these are cash holdings which have been liquidated in the market. So essentially, I have done what is known as a long unwind, and my reasoning for the long unwind was an exhaustion gap. The other aspect is that when a market is creating higher lows and higher bottoms, we have a clearly trending market. And in such a trending market, a relevant point of entry would be around the 20 or the 50-day moving average, which we can see is a good 600 points, at least 600 to 1000 points lower from where the market is currently located. It is not to say that it is not possible for the market to continue with the upside move. In that case, there is a plan, and the plan is to continue building long positions. So, say for example, say for example, we see the recent swing in the market is upward. That is when we connect a good 1 month move, we can clearly see that the market is moving upwards, and the only premise is that this gap up formation so late into the move looks like an exhaustion gap to me, which would be confirmed if there is a gap down formation. In that case, it would result in an evening star sort of a pattern. If the market, however, continues with the upside move, which is factored in by the fact that we are still holding at least net long positions on the market with Nifty Jan Future and a couple of stocks. In that case, we will continue to trail the market, and begin to and start building positions on new stocks which might be at swing lows. So here I would just show the Sanofi chart, for example. Here we would see that this particular chart, we can see multiple crosses on the moving average, which indicates that this is a range. And in the last 1 month, where we have seen the market form a clear-cut new high and form extensive moves, we are only seeing Sanofi trade in a very rectangular kind of a range like this right here. We can see this. Uh, so it's obviously this stock has underperformed the market, and we can see that this period here has been tested for a good month or so. I mean, it's good couple of weeks, and sharp buying at the 8,000 on levels, indicating a reasonable support for this stock. So it is possible now, given that we can see a couple of strong bars here. Few This is obviously a bullish engulfing candle. We are seeing a bullish harami candle right here. So it's reasonable to assume that right around here is the region of support, and therefore this region is an appropriate stop loss for this stock. And now at the cross section of the 2050 moving average and the formation of okay, it looks like a bullish engulfing kind of a candle, but it's not really very convincing. It's a green outside day candle, but fair enough. We have a gap up open and a strong close in the morning, so it's reasonable to take up long positions on the stock at say 8,300 with a stop loss of say 7,600. This is all factoring in the event the market continues. So our job becomes to now see what stocks are trading at their swing lows, hopefully with the idea of getting a good risk to reward. It's reasonable to assume the first target on this stock around here, because structurally, if you look at this stock on the weekly charts, um, you will notice that this is actually an upward trending stock, and the region that we have marked out coincides with this 50-week moving average, which should be quite a strong support. And within on the weekly charts, when we observe, we can see that along this region, we can see a doji, a candle which engulfs this particular doji. This particular candle looks like an inside day for this candle. We have another inside day here. We have a long wick candle right here. We have trading action spanning from last year of April around here. So this is quite a strong region of support, and trading below the 50-week moving average, it is definitely justified to take up a long position, or at least prima facie, given that it is from its higher top at this point in time, it is forming hopefully a higher bottom, while the market has actually created higher highs. And as mentioned again, that the only reason for including this stock now so late into the up move of the market is because there is a theoretical chance that this particular gap might be an exhaustion gap. If the market continues, it should not be a surprise. We have some very strong performing indexes, but the occurrence of this gap has definitely cautioned me, and consequently, I have for now taken off the stocks only with the plan that if I see a continuation move in the market, will I start adding more positions into the market. So these are just a few updates for today, and I just hope that you have a good trading week and a good trading month ahead. If you have any queries related to the process of decision making, do comment, and since it's a fledgling channel, so to speak, your likes, share, or comments really adds a lot of difference to the feedback that I can get from the audience. So thank you very much. Hopefully you have a good day. Take care.